Joining us this morning, Inside.com founder, CEO Jason Calacanis, author of the new book out yesterday called Angel.
Yeah.
Congratulations.
Thank you.
How to invest in technology startups and turn 100 grand into 100 million.
Yeah. Hit 6 unicorns. Be in Silicon Valley.
Before we get to the book, we are watching the major averages this morning. The NASDAQ, another record high today, seeing its longest win streak in 2 years, trying for 9 record closes in a row. John, a lot of this is due to the idea that, to a large extent, FANG is back, and NASDAQ slowly recovering its year-to-date outperformance up 17 versus 9 and change for the Dow.
I don't know if we can call it a comeback because they've been here for years, and I've been waiting a long time to actually use that in context. But Netflix a lot stronger, particularly domestically, as we talked about yesterday, than people expected it to be. And there's this bifurcation that continues to happen in tech. I mean, FANG strong. We'll see how Apple does with the iPhone out later. IBM falling after earnings, as it typically does. I think something like 12 out of the last 14 quarters, it's been down 3% or more after earnings. Analysts nonetheless saw some silver linings in this quarter, despite the fact that there are strategic growth areas. The growth was slower there, up only about 7%, but still some positives. Profitability was pretty good. EPS number was good. Some of that was because of a tax benefit, but not all of it was because of a tax benefit.
Yes, revenue down for IBM 4.7, the steepest fall in 5 quarters. So we're watching a big blue today, definitely. We have to thank Netflix for most of the gains in the NASDAQ yesterday. That stock surged more than 13% on those subs and content bets. Stock this morning is up another percent to 185 and change. And speaking of content, reports this morning, the Discovery's in talks to combine with Scripps for an undisclosed amount. Scripps owns brands like HGTV, Travel, and the DIY Network. Reuters says Viacom may also be working on a bid for Scripps. Another interesting turn here in media, Jason. I wonder if you think some of these names do, in fact, need to start getting together.
Yeah, absolutely. If you look at Netflix, they kind of created a juggernaut with Disney selling them a bunch of assets, HBO allowing them to put on a bunch of shows from the library. And they're probably looking at that going, oh, my God, we've just created this unstoppable monster. We were here a year ago talking about Netflix. And I said, I think this is a couple of 100 million subs. And I kind of got laughed off of Twitter. And now we've broken 100. If you look at it from a top-down analysis of 3 billion people online, 1.5 billion of them on broadband, the other 1.5 billion will obviously go to broadband. I think 10, 20% of the people on broadband in the world could be on Netflix. Now, if you start to look at that, I think 250 million subscribers is not unreasonable in the next decade, 5 to 10 years.
So you're saying the first 100 million is the hardest?
Exactly, exactly. And, you know, if you look at it now, they've hit that tipping point, which is very magical in technology companies when the majority of the users and/or revenue starts to come international. This is going to be a Google and Facebook-like story where people say Google and Facebook could never operate and be the #1 player in these other markets. Google's the #1 player in search in every market except for 4.
Jason, this looks to me partly like skinny bundle planning, though, because if you're expecting the world of a skinny bundle where certain of these channels, I don't know, the DIY channel maybe, that tend to get carried won't necessarily be carried anymore. How do these different networks need to get together in order to either put together a digital offering that's compelling or, you know, still be able to exercise some market power when they can't sell and distribute the way they used to?
This is like 4 or 5 people are drowning and they're going to grab onto each other kind of metaphor. Like, I don't think they can, to be honest. It would take extreme leadership and the ability to put all this stuff together under one price. Maybe Disney could do it. But it's going to be a real free-for-all when all these sports
But some of these channels that we're looking at, a TLC and HGTV, the Food Network, I mean, some are stronger than others.
Yeah, I don't think anybody's paying for those directly. I don't think any consumer's taking their credit card out and buying, you know, 10 million consumers are not going to go out and buy the Food Network. Maybe get 1 million or a half million.
I'm surprised you picked the Food Network.
Because I know people are passionate about food, but I think
food.
People love stopping on food when they're flipping through the channels. It's not appointment television like Game of Thrones.
More passive.
Yeah, it's very passive. This really what you're seeing is the switch from people just flipping through the channels and stopping on something to people saying, what's the best? What is it recommending for me, the algorithm? I watch that. And once you get on that train and you don't waste your time flipping channels, it's over. It really is over.
Really quick on Netflix. I've seen it written a couple times today that Netflix doesn't have the moat against competitors the way Facebook and Google and Amazon do. That there's somehow this outlier within FANG.
Yeah.
Fair?
Maybe. What I think could happen is, because they're so good at this, some of these shows will become international shows. So the same way Homeland came to the United States from Israel and The Office came from London here, and we take shows and we export them, there could be a Discovery-like play or an MTV-like play where Orange is the New Black then becomes a regional show in maybe 10 regions, and India, in China, etc. So with the majority of the users now international, this is an international play on the scale of a Facebook or a Google in my mind.
And what we don't know is how much of Netflix's success, how much of its hit making is because of its data, because it's just better, because of what it knows about people versus just serendipity. And if there's a moat, it's probably that, but it's impossible for the investor to know exactly how much of it is data and how much of it is luck.
Yeah, I mean, if you were going to pick who the winner of this space would be, it would be either Amazon or Netflix, and it looks like it's going to be Netflix. But it could be a Google-Yahoo-like relationship where Google has the majority and Yahoo has the minority of it.
Switch to Alphabet here, rolling out a competitor to Twitter and Facebook. Google is unveiling a new version of its mobile search app. They're calling it the Google Feed to give users a stream of personalized links about their hobbies, travel, sports, and more. Google says it's not trying to duplicate Facebook's news feed. Moves like these sparking some fears that companies like Google and Amazon are becoming too large and anti-competitive. And is that another sign that regulators need to break up big tech? I don't know. It's so intense.
The fourth swing at the bat for social. They're claiming it's not. And then algorithmic news. I don't think it's going to happen. The algorithms can't even figure out what fake news is versus real news. At Inside, we use humans. It works really well to curate the news and actually read it and give some analysis. So I think this is a, what do they call it in the Trump campaign, a nothing burger? Like, Google is so bad at releasing new products. When is the last time they had a really, truly great product they released? It was Gmail. Everything else they bought.
When it comes to news, Google's floundering is really perplexing to me. So Google News, that kind of worked. They had Google Reader, which a lot of people love. They killed that. Google Alerts, which seem to do what this app thing does, but into your email, that's still around, but yet we have this. And then, I mean, it's
no
all
strategy.
These different things. I mean, I guess on the one hand, Google wants you to log in and tell Google what you're interested in. How many times are we going to fall for that trick? More information about you. I don't know.
It's just going to show you more of what you already know, and so it becomes like a bit of an echo chamber, and it doesn't introduce you to new things. This is the problem with the algorithm. And we saw this with Facebook during the election. We'll see it again with this product.
But I use Google News when I'm searching for something specific, and that's where I get frustrated.
Yeah, it's a sniper shot.
It's gotten much worse. You know, when Google News first, came into being, it was wonderful because you could immediately go back and say, who was that guy who said Game of Thrones should be shorter? Boom, there it is.
Yeah, you know why?
Now it's because all of the content creators said we're gating it. The Journal, FT, you name it. It's the lowest quality resource, and the way that they rank the hits is not even that good.
Google should be looked at and is being looked at as the enemy of content companies. They've really screwed over their partners consistently over the years. They started with a revenue sharing product. Now they read the Journal, or they take a CNBC story and they say, you know, how many unicorns does Jason have? 6, great. They put it in a one box, answer at the top, and you don't have to click anymore. So they've really double-crossed a lot of their content providers to the point at which Wall Street Journal and New York Times don't want to deal with them anymore. And the great success of the Wall Street Journal and the New York Times has been to abandon Facebook, to abandon Google, rightfully not trust them because it's the fox in the hen house, and now they have subscribers and subscriptions are growing.
We should mention that Facebook is trying to counter that. There's this headline that in October they're going to come out with their own subscription product that allows people 10 free views, but then you've got to sign up for the Journal or the Times or
now
CNBC Pro.
Suddenly, after all the news sources finally figure out what Rupert Murdoch knew in the beginning, and people laughed Murdoch out of the room when he said, you know, these are the enemies, they're stealing our content. Now everybody realized, oh my God, Rupert was so right. And now we go and we put a paywall up, and all of a sudden we have millions of subscribers, and news is sustainable again. You can't trust Facebook or Google with your content. You shouldn't. And when they come to you with this fakaka, subscription service, you should say no, thank you. For sure.
What a far cry from when you could only succeed by hitching your wagon to the Facebook train. Let's briefly touch on your book here. It's called Angel: How to Invest in Technology Startups. Very relevant considering the recent performance of some IPOs.
Yes.
Like Blue Apron and Snapchat.
Yeah. Well, if you were an angel in those companies, you'd be really happy. Snapchat at $5 billion would make, the team over at Benchmark and Bill Gurley give a real yum-yum. So it's one of the great things when you invest at 5 or 10 or 15 million or even up to $30 million in companies, which is what I do and I specialize in, because if you exit at $1 billion or 10 billion or 50, it's going to work out okay. But for people who are accredited investors in the audience, there's a lot of opportunity now through services like Seed Invest, AngelList, My Syndicate, Jason Syndicate to watch what we're investing in and then co-invest or not on a deal-by-deal basis. So the world's changing and people are sharing access to these early-stage companies.
What's the smallest check you can possibly write?
Yeah, $1,000 per company is the smallest you can do in my syndicate, at Jason Syndicate. So I basically write a deal memo. Here's what I'm investing in next and why. I'm putting in $25K, $250K. And then 99 people can jump on board and invest with me. I get a little carry, 20% of whatever the gains are. But I really do it because it's fun to democratize this and see 50 other angel investors rooting for the company. And sometimes it's somebody at Procter & Gamble or Disney who's, on the side, on their side hustle investing in these companies. And when they need an introduction at Disney or ESPN, or a Procter & Gamble company, they have that introduction. So.
How much do you worry that the masses don't, even the masses who are able to jump into this game and have the money, don't understand it and are going to end up getting burned and giving it a bad name?
Which is why I wrote the book, and I kind of explained how to do this slowly. If you were playing poker, you wouldn't go to a $25,000 buying game to learn. You would go to the and people do. Trust me, I make a living on it. Yum, yum. That's where, playing at the $1, $2 table when you're starting, which in this analogy would be the $1,000 investment, is wise. You want to start small, learn the craft, maybe in year 2 or 3, start to double down on your winners. And it worked for me. I had 6 unicorns and 125
And apparently you can just churn this book out like it's nothing.
Well, you know what? I meet a lot of people who write books and they come on programs like yours and they're like, I want to be an expert on this subject, so I'm going to write a book. It always seemed backwards to me. So I waited to write the book until I actually had 3 or 4 unicorns. Since that time, I hit 2 more. This week, Desktop Metal, you may have heard about.
I'm talking about, how many days did it take you to write this?
19 days I wrote it. 2,000 or 3,000 words a day, and then I did a big boom for the last 3 or 4 days. And I had a lot of help from HarperCollins and a bunch of other people. But, if you're writing about something you're an expert on and you just keep it simple and you already have a thesis that you've been refining, then I think you should write a book. But, man, a lot of people I know who are very stupid write books about things they don't know a lot about. This is something I happen to know a lot about. And it's an easy read and it's funny. If you've seen me on this program, sometimes I drop a joke or two.
Our viewers are well aware.
They're well aware.
Yes. Congratulations.
Thank you.
Come back soon.
Always.
Jason Calacanis,
Thanks for having me, Carl.
Author now of Angel.